Welcome to Satoshi Swiss Crypto. This is where we transform your crypto journey. Are you tired of constantly monitoring the market? Now you can trade like a pro without being glued to your computer with our $1,000 to $100,000 trading challenge. For just $79 a month, you can automatically mirror my trades. Subscribe today and elevate your crypto game with Satoshi Swiss. Let's conquer the crypto world together. Press the first link in the description below to join, and let's now finally start with the video. Shiba Inu helped create billionaires while you slept. Indeed, you have heard correctly. Rich people with a capital B, they are advancing toward their objective of becoming trillionaires and are unstoppable. It is difficult to believe. I mean, how on earth is that possible? No one is a trillionaire, not even Elon Musk. But first, let me explain. You will see what I mean by the end of this video. Withdrawal. There are some huge news reports. The Shiba Inu development team revealed the burning of almost 8 billion Shiba tokens worth over $76,000 within the recorded transaction period, causing the Shiba Inu cryptocurrency burning tracker to experience a major surge, or as the Shiba army refers to it, a wave. This transfer took place not long after Shibarium saw a notable rise in daily transactions. Almost 8 million transfers occurred just yesterday, resulting in significant trading fees in BONE tokens. As you may recall, BONE serves as a gas token, or the token you use to pay the transaction fee when transacting on Shibarium. A significant burn transaction resulted from exchanging the 50,000 accrued bones for the main token, as detailed in the most recent issue of Shiba magazine. The increased burning activity is paralleling the SRC20 token minting process, and the Shiba Inu community is hoping for a long-term fix to keep the Canine coin burning at a steady pace. Make sure to subscribe to this channel for more updates on the SRC20 token minting process, including full explanations. Shibarium developers recently announced an enhanced Shiba Inu burning process in an official blog post, scheduled for launch in January 2024. There are manual and automatic modes in this dual Shiba Inu burning system. The token burning procedure in manual mode is not yet coordinated with node operators and on-chain validators, and it is managed by the deployer's wallet. There's much technical jargon, but I will definitely address that in one of my upcoming videos. However, since trading fees are a contributing factor to Shiba burns, the automatic mode ensures efficiency and justice for cryptocurrency fans by carrying out Shiba burns in accordance with predetermined rules. One of the most important components of Shibarium's financial environment is the Shiba Inu burning process. These significant advancements in the Shiba Inu ecosystem remind me of one of the enormous cryptocurrency whales that made a lot of money with Shiba Inu. One of the members of the social networking platform X posted information on an anonymous cryptocurrency trader who made a substantial $1, 6 cents billion, 6 cents billion, 6 cents billion Ethereum in a year. Here's a simple illustration to help you grasp what $1, $6 billion actually is. It would take you more than 50 years to accumulate $1, 6 cents billion if you were to make $1 per second, or $3,600 per hour. When stated from the perspective of time, this time frame highlights the number's vastness and the huge time frame it represents. The article showcased the trader's ability to spot cryptocurrencies with significantly smaller market caps, which led to an incredible 3 million % increase in his cryptocurrency portfolio. It may seem very appealing to trade low-cap cryptocurrencies in order to achieve a 3 million % rise, but it is important to understand that there are serious hazards associated with this strategy. Low-cap coin trading can be extremely speculative and volatile. While some people might make significant returns, many others have to deal with the hard reality of losing the money they invested. Because low-cap coins typically have smaller market capitalizations, they are more vulnerable to sudden price swings caused by changes in market sentiment, problems with liquidity, and a lack of regulatory control. Elevated risk levels are generally associated with the attraction of large profits. People who are thinking about using these kinds of trading tactics should make sure they do their homework, keep up with market developments, and understand the hazards. This whale was not foolish enough to rely just on one extremely dangerous tactic. Along with trading major crypto coins, he also dealt in Shiba, Inu, and Ethereum. The trader currently owns about $380 million worth of Shiba Inu and over $400 million worth of Ethereum, making up the majority of his portfolio. And there is a purpose for everything. Crypto ETFs You should already be aware that cryptocurrency exchange traded funds or ETFs have the power to significantly alter the cryptocurrency market if you have watched any of my earlier videos, as it offers a more regulated and accessible mechanism for big institutional investors to have exposure to cryptocurrencies. Crypto ETF might draw a sizable inflow of institutional and retail capital into the market and raise prices. You should be aware that these institutional investors are businesses that manage substantial sums of money and make investments on behalf of others. Banks, mutual funds, insurance firms, hedge funds, pension funds, and other financial institutions are some examples of these organizations. To put it simply, the Bitcoin ETF is the subject of several online discussions, but when individuals only talk about Bitcoin, they fail to see the bigger picture. If authorized, cryptocurrency exchange traded funds will expand beyond Bitcoin. This is only the beginning for the Bitcoin ETF. The following is the worry that has recently gained traction in the cryptocurrency world. What happens if these major actors or institutional investors have no interest in cryptocurrencies? However, this reasoning is flawed because they could easily invest in cryptocurrencies through Coinbase or Binance instead of waiting for an ETF to be approved. However, this is the exact point at which they are incorrect. Using websites like Binance or Coinbase to make direct cryptocurrency investments presents challenges for institutional investors, especially in the interim until cryptocurrency exchange traded funds or ETFs receive regulatory approval. One of the problems is that regulations are murky and function in a regulatory gray area, which presents issues. Because of the special characteristics of digital assets and the absence of a defined legal framework, institutional investors may find it difficult to comply with regulations and do due diligence. And furthermore, because cryptocurrencies are digital in nature and carry security risks, custody issues come up. Securing private keys and defending against cyber attacks may be difficult for institutional investors who frequently have strict custody requirements. Another factor discouraging institutional investors who might be wary of the risks involved is the extreme volatility of cryptocurrencies. A few short years in the crypto sector and a dearth of historical data add to this anxiety. Conventional banking establishments might not have the required framework to easily interface with Bitcoin exchanges. For institutions, building the necessary infrastructure for trading, settlement, and reporting may involve a large investment. Additionally, institutional investors frequently employ risk-managed and diversified investment methods, which could not be compatible with the small selection of investment options offered by the cryptocurrency market prior to the establishment of ETFs. These investors may not be comfortable taking on the risk of making direct investments in particular cryptocurrencies. Now that we know this rumor is unfounded, let us move on to something intriguing. Approved Bitcoin ETFs will free up ETF businesses to concentrate on other cryptocurrencies like Shiba Inu, for example. Once the first crypto ETF is accepted, the approval process for subsequent ones will move quickly as they will know exactly what is needed to list them on the stock exchange. The largest asset manager in the world, BlackRock, recently revealed that an unnamed investor provided $100,000 of the initial investment for their spot Bitcoin ETF. Despite the fact that the Bitcoin ETF has not yet received approval, that is incredibly fascinating. Despite the fact that the Bitcoin ETF has not yet received approval, people are investing in it. It indicates a great deal of interest. We just talked about a ridiculous question from some novices in the crypto world, and this news totally disproves it. As you recall, the concern arose what would happen if these major actors or institutional investors had no interest in cryptocurrencies. Do you all feel optimistic? Please leave a comment below. Speaking of wealthy individuals, check out this fascinating piece. The data shown illustrates the distribution of under 50 billionaires per industry. Notably, banking, finance, and technology are the two biggest industries. The high concentration of billionaires in the technology industry is a sign of the growing use of cryptocurrencies and blockchain technology in a range of tech-related endeavors. In this field, a lot of people are aware of how decentralized technologies can change entire sectors. This could entail funding blockchain startups, creating initiatives linked to cryptocurrencies, or integrating blockchain technology into already established companies. The growth of cryptocurrencies and the notable concentration of billionaires in banking and finance indicate a change in the dynamics of established financial systems. With the example of Bitcoin and other altcoins like Shiba Inu, cryptocurrencies have brought in new money and financial assets that do not fit inside conventional banking structures. A small number of billionaires in this industry might be actively investigating or making investments in digital assets because they understand how blockchain technology might improve security, simplify financial transactions, and open up new investment opportunities. The convergence of these industries with the cryptocurrency field highlights a larger trend. The recognition of digital assets and blockchain as revolutionary engines. The interaction of cryptocurrencies with the banking and technology industries as they develop further points to the importance of digital innovation and transforming the financial landscape. This congruence suggests that cryptocurrencies may have a bright future, not just as speculative investments, but also as technologies that have the power to fundamentally alter the way people interact with and think about money transactions and financial services. What are your thoughts about it? Please leave a comment below. I'd be interested in hearing your thoughts on that. We have now reached the conclusion of this video. If you liked the video, please hit the like button and do not forget to leave a comment down below. This is a huge assistance for the YouTube algorithm. Please spread the word about this video to as many people as you can. Let us disseminate this news.